The drama continues with First Republic Bank, and this time, it may never recover. Welcome back. S&P, a credit rating agency, just cut the credit rating, the credit worthiness of First Republic Bank again. They just can't stop hammering this bank now, can they? Maybe it's a conspiracy to buy the dip. But there are a couple credit rating agencies that look at the credit worthiness of companies and they assign them a score. You have Moody's, you have S&P, and you have Fitch. And basically, the lower the letter, the worse the credit rating is. Now, back in 2007, 2008, these clowns made some massive errors and gave AAA ratings, or AA at least, to a bunch of mortgage-backed securities that were full of mortgages that people weren't paying, that were garbage mortgages. But that's neither here nor there. But now we see that S&P has been actively cutting the rating, the credit rating of First Republic Bank. And I guess that's good on them for being diligent. Now, what exactly are they saying about First Republic Bank? It ain't good. S&P lowered First Republic's long-term issuer credit rating to B+ from B++, having already downgraded the lender to a sub-investment grade, or junk. That's a good way to describe your company's bonds and preferred stock and whatever else you have outstanding territory last Wednesday. The ratings agency said a recent $30 billion infusion from some of Wall Street's biggest lenders may not solve the substantial challenges the bank is now likely facing. Now, what is this $30 billion infusion? Well, a lot of banks have actually put money into First Republic Bank to basically save their own butts, okay? So here's a press release from March 16, 2023, where First Republic Bank told all their investors that $30 billion total had been deposited by Bank of America, Citigroup. I'm sure you recognize some of these names, maybe, well, hopefully. JP Morgan Chase, Wells Fargo, Goldman Sachs, Morgan Stanley, Bank of New York Mellon, PNC Bank, State Street, Truist, and U.S. Bank. Basically every freaking big bank in the world. Every big bank in the United States, at least. Deposited a cumulative $30 billion to keep the bank afloat. Because sometimes bankers come together and they join hands and they say, we have to serve our best interest. We cannot let all of these banks fall like dominoes, because if they do, we could be next, because this is the nature of fractional reserve banking. The vast majority of people's deposits are not sitting in cash in a vault somewhere. They're lent out, and a lot of times they're in illiquid investments of the bank. And when people rush the bank, that causes problems. Now, let's talk a little bit more about these credit ratings, okay? So the credit ratings that First Republic has on their website show B++, B++, B, 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 B. Now, this was last updated on March 15, 2023. So if you go on their website, they should probably update this. You know what I'm saying? But before the cut, they were trading at, their rating was BB+. Speculative elements, this is the description for S&P right here. Speculative elements, issuer faces major uncertainties and adverse conditions, okay? That's right below good credit quality, currently low risk credit. Here's where you can see that it's basically junk, okay? Ideally, you want your investment to be up here, AAA, highest credit quality, minimum credit risk. But at least S&P is doing their due diligence, unlike in 2007, 2008. But we're not going to talk about that right now, okay? Now, First Republic has been downgraded to high credit risk, but issuer still able to meet its financial commitments. Now, that's a very interesting statement there. What they're saying is First Republic Bank isn't done, son, okay? It isn't completely done, but it's on the borderline, because let's look at the next place that they could potentially cut this bank's credit rating. Issuer, if they cut it to CCC, triple C, issuer currently vulnerable, default likely. Now, if we get to that rating, that's going to really destroy the stock price. And then we could get even worse and go to R, S, D, and D, or CC, and then R, S, D, and D, all of which are bad, okay? You don't want to be down here in the C's, because default likely is going to send this company's stock price into an absolute nosedive, worse than it's already been, okay? It's already down 84%, and it doesn't help that S&P has cut their credit rating again. So So let's talk about, finally, what is the investment thesis behind First Republic Bank? Well, if you are a gambling man or gambling woman, we're equal opportunity here on this YouTube channel. If you're a gambling man or woman and you looked and you said, okay, the bank is fundamentally sound, there's just currently a banking run going on. There's a bank credit, a bank panic, where a bunch of people are rushing the bank and taking their money out all at once. If you're sitting there and you're thinking, you know what? It seems like there's a lot of major players that are trying to keep this bank alive. All the banks we just listed earlier. And you would say, at some point, the panic is going to slow down, hopefully. And if it does, the bank could potentially recover. Because if you think about it, every single bank in the world can be destroyed by a bank run. Every single one of them. Every bank is vulnerable to this. Banks get destroyed by massive, sudden spikes in fear. If that fear abates and withdrawal requests stop and the bank doesn't run out of cash, they can potentially survive. Now, if you look at it and you say, okay, what is this bank valued at? It's basically priced for near bankruptcy. Look at the price to books. It's collapsed to 0.25, okay? Normally, this bank's price to books trades at like over 1.25 at least. And now it's collapsed to 0.25. So you're buying this bank for pennies on the dollar if it's able to survive, okay? So keep that in mind. But you could buy this bank, you could buy this stock, and then the panic continues. People keep taking their money out regardless of who's depositing money to keep it afloat, and the bank will eventually collapse. If enough people try to take their money out, every single bank will collapse. So that's the gamble, okay? That's what you have to consider when you're buying a company like this. You could make a ton of money, or you could lose it all. So keep that in mind. But that's the latest news. I don't know what's going to come of this. This is a very interesting time, to be honest, because I've never lived through a banking panic. I mean, I guess I did in 2008, but I didn't really care back then. I was in college studying history. All right, that's it. Hope you enjoyed the video, and hope you guys don't lose all your money in First Republic Bank. Cheers!